Mapletree Industrial Trust reported their result on 25th Jan and its price dropped 5.31% in 1 week. Is it an opportunity to collect more or is it time to sell? I will be sharing my action on Mapletree Industrial Trust with stock code ME8U. This is not investment advice, I am just sharing on what I will be doing. Mapletree Industrial Trust, or MIT in short, has just announced their third quarter of FY21 results. In my opinion, their results are good. The link to check out MIT's presentation slides is shown in the description. Based on fundamental and technical analysis, I will be collecting MIT in two tranches. The first buy will be in the 2.49 to 2.55 region. The second buy will be in the 2.2 to 2.29 region. You can stop watching the video here if you understood what the table and the chart means. Else, please continue watching as I will be elaborating them in the next few slides. Based on the parameters stated in this table, 4 out of 5 pass my personal preference. That's great. If you are not familiar with the parameters, I have done up a video earlier and the link is shown on the top right hand corner and in the description. MIT has been trading above PB ratio 1 for quite some time. It will take a big crash like the crash in March 2020 to get MIT down below PB ratio 1. Hence for MIT, I will choose to ignore that its PB ratio is above 1 currently. One point I really like about MIT is the rising DPU. As shown below, MIT is getting more data centers into their asset portfolios, and that's great news as moving ahead, there will be more data centers needed for technologies such as cloud computing and artificial intelligence. Past 10 years of rising TPU indicates that MIT have some good management leading them. Do hit the like and subscribe button if you like the content. It gives me motivation on knowing that I'm creating useful content. Next is the technical analysis on MIT. We are looking at the weekly candles chart here. It is on the uptrend since listed. The horizontal support zones marked out in black and orange are also shown. One thing to take note is MIT has a trend of consolidating first before the upward price movement as shown by the green boxes. The current sideways price movement suggests that we are in a consolidation phase before the price continues to move upward. However, if you are trading, you might want to hold back your purchase as we are currently seeing a bearish engulfing pattern on the weekly candles chart. As an example, the last bearish engulfing pattern at the resistance is shown in the pink box. The price continues downtrend after that. I have also shown an example of bullish engulfing pattern at support, shown in the green box. The price continues uptrend after that. This is the type of entry signal we should be waiting for. For me, I will be collecting some shares at the first black support zone as I am investing and will be holding this stock for some time. If the black support zone breaks, I will be collecting more at the orange horizontal support zone. There might be some people having concerns on the rising interest rates environment. The bar chart below shows that MIT has a well staggered debt maturity. My view is that the interest rates rising is short term, and with debt maturity of 22.6% from FY22 to FY24, MIT is well prepared for the rising interest rates environment. Mr. Chua Teo Chai, one of MIT's senior management, bought in more shares at $2.61 and $2.53 per unit. This action gives investors like me confidence. The price now is $2.51, and if we buy now, we are buying at a better price than him. For me, MIT is a long-term hold. We shall see why below. The past DPU 10-year gain percentage is shown in the table below. Q4 of FY21 DPU will only be out after March 2022, and I have estimated the DPU to be the same as Q3 of FY21. The average percentage of lowest 5 years DPU gain is 2.4%, and the average percentage of 10 years DPU gain is 5.1%. We will be using the DPU gain percentage, box in red, to do a projection of the distributions we are getting. Assuming a purchase price of $2.51 and constant DPU gain of 2.4% for the next 10 years, It is projected that we will be getting 7% returns excluding price appreciation from year 2032 onwards. Assuming a purchase price of $2.51 and constant DPU gain of 5.1% for the next 10 years, it is projected that we will be getting 9% returns excluding price appreciation from year 2032 onwards. In both cases, we are getting good percentage returns from the distributions. That's why I think MIT is a good long-term hold. This is a list of reference I have used to create this video. Thanks to these links and your kind attention. Do subscribe and check out my other videos. Have a great day ahead.